Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We are back with another 15 minutes. Let's get it. Guys, it's been a great week. It's been a great week if you're a client of ours. I'll definitely say that much. Okay, hold on. I'm already getting humbled by myself here. So that attitude that I just had, I do have that attitude, and then immediately I feel, I don't know what it is. If it's God, if it's I don't know what it is, but I just feel humbled, and I am remembered that in this field, that in the investment journey, this too shall pass. Okay, so we had a great 2024. We're having a great start to 2025. We're bullish on the next couple of years, but this too shall pass. And I have to remind myself of that. So I'm grounding myself. And we'll talk a little bit about some of the things that are going well for us and some of the positions that we really like. Palantir, cough, Palantir. And we will talk, NVIDIA, cough. We will talk about those just briefly today, but we're going to go over the news. And then I'm going to explain a couple things. And then honestly, we're going to talk a little bit about crypto today. Probably not that much because I am such a noob and I know so very little about that world. But I am on the daily, guys, getting more and more intrigued. So kind of excited to go through that with you because that's going to be a mutual learning journey. And always, before I start, I'm going to speak freely in this episode, but here's the disclaimer. This is not personal financial advice, okay? This is all research, educational purposes, and it's my opinion, and I have to say that, guys. I have to say that because crypto's not regulated. I'm not allowed to advise on crypto. I can't trade in anybody's crypto account, wallet, etc. It's literally illegal. I think they could sue me, the SEC. I'm sure I would just get fined. Marshawn Lynch, I'm just here so I don't get fined. But I would prefer not to. Some of these fines I be seeing from like Vanguard or Morgan Stanley, it's like $55 million fine for breaking texting violations. And I'm just like, oh, please don't come audit me. Please don't come audit us. But no, we passed an audit last year by the state of California. So we are, as far as recently, we passed. We're with flying colors. So not too actually worried about that. But guys, I have a term of the day today for you. And I thought it was important because I think it already happened today. Maybe it happens later today. I should probably know this before I talk about it. But jobs reports was coming out today. Jobs reports or payroll? It was one or the other one. That's an important metric, but it was non-farm payroll, which is that's a little different than just payroll or employment numbers. So non-farm payroll is pretty much, I mean, it's exactly what it sounds like. It's just not considering farms and ranches and whatnot, but it also takes into account, doesn't take into account nonprofits, any military projects, armed services, and what else? Something else. I can't really remember what it is. Anyways, just think of it like actual companies, for-profit companies in America. That is what non-farm payroll is referring to. So when that data comes out, it's pretty accurate growth or pretty accurate representation of the companies that are really trying to grow, right? Farms for the most part aren't trying to grow. They're growing food, I guess, technically. So I guess I got to correct myself there. But they're not like expanding how a company would. Like, I'm not judging a farm every year based upon how much land they buy, right? It's production, crops, et cetera, et cetera. So anyways, that is the term of the day, non-farm payroll, which is important because that data comes out often and it is used to make an analysis of the market. Okay, let's read the news today. Oh, it was a solid day. It was okay. I mean, the overall market went down 1%, but still very fine day. Okay. Let's see. Here we go. Major U.S. stock indexes slid on Friday as investors digested closely watched monthly employment numbers and a sharp drop in consumer sentiment. There we go. The S&P 500 and Dow Jones Industrial Average both declined 1%, while the NASDAQ fell 1.4%, and the major indexes all gave up ground this week, with the Dow and NASDAQ each falling 0.5% and the S&P 500 down 0.2%. The employment numbers from the Labor Department released Friday morning showed that employers added fewer jobs in January than economists had expected, while the unemployment rate unexpectedly declined to 4%. The monthly jobs report is one of the more important indicators followed by the Federal Reserve in its decision in making on interest rates, which makes it a critical data point for investors. Not adding jobs tends to lower the interest rate. So that is, at least initially, I don't know why they're entirely correlated, but they do think that when a bunch of jobs are being added, it means that there's just, its growth is happening too rapidly. And when that happens, it puts stress on the inflation rate. Let's see. See, I do this every time I read this. I start ranting because I wanted to elaborate. Okay, here we go. I found it, guys. Stocks were marginally higher after the jobs data, but another report suggesting consumer sentiment has declined sharply this month caused the major indexes to nosedive in the negative territory. The yield on 10-year treasuries, which is sensitive to market expectations about the outlook for the economy and interest rates, was at 4.49%, up from 4.4% before the release of the jobs data, but well below the rates around 4.6% from earlier this week. Amazon fell 4% after issuing a disappointing sales outlook that offset better than expected fourth quarter earnings. Other major tech stocks were mostly lower. Alphabet, Tesla, Broadcom, each slid about 3%, while Apple and Microsoft dipped 2% and 1% respectively. NVIDIA, King NVIDIA, and Meta Platforms bucked the trend and ticked higher, significantly higher. Shares of several companies were making massive moves this morning following the release of quarterly results. On the upside, Pinterest, Affirm, Doximity, Expedia, Cloudflare, and Take-Two Interactive all jumped more than 10%. Bill Holdings and Elf Beauty plunged 35% and 25% and 20% respectively. Bitcoin slumped below 96,000 after briefly crossing 100,000 earlier in the day. Gold futures surged to a record above 2,910 before retreating to around 2,890, and crude oil futures were 0.5% higher. Okay, guys. I'm at 7:40 seconds. Okay. Guys, Palantir. Let's just talk about Palantir real quick. Well, hold on. We'll talk about NVIDIA first. NVIDIA dropped on the fear of DeepSeek last week, and I gave a very in-depth podcast about NVIDIA. I said I was buying the dip. I think the lowest I bought at was 112, and I'm talking 4 clients. Not everybody, but people who are on the hey, buy the dip path. And now it's at 129. I don't really know what it's at right now. I should probably look before I speak, That's probably a wise decision. NVIDIA is at 129. What am I talking about? Trust your gut. It's at 129 spot 84. So NVIDIA, I think all-time high here was 150, and I have no doubt it'll hit that and crash that glass ceiling and just blow right through it. So that's the first thing. NVIDIA, buy the dip. It's the trailblazing company that it is. Hard to beat. It's like an unstoppable force, to be entirely honest, in the market of chips. Speaking of unstoppable forces, let's move on. So we talked about NVIDIA hardware. Let's talk about software. Palantir. Now, Palantir, if you guys have been using our newsletter or following the podcast, Palantir has been one of my favorite companies for many years. Well, many months. I would say probably the beginning of last year I started following it. But Palantir, first heard about it around $16, and it's a software company. And essentially what they do, and a lot of you already know this because I talk about it all the time, but they have a AI system in place that essentially takes extremely long projects or projects that used to take an extremely long time and cuts their project time in an exponential amount. So like one example they use is that government contracts or projects that would used to take 8 weeks now takes 8 days, or 8 months now takes 8 days. So it's pretty much just crushing work time, and it's just freeing up time. That's really what Palantir is all about, freeing up time for businesses, governments, militaries, etc. with their software, and they are exceptionally efficient doing it. I personally believe they are the Microsoft for millennials. Now, again, I'm speaking pretty gung-ho and confidently, but I mean that. And you know, if I'm wrong, I'll come here and own it, right? I mean, what kind of advisor would I be, or stock picker, or whatever, wealth manager, if I didn't put my name behind stuff, right? And I'm happy to do it because other advisors won't do it, okay? Right now, if you're in an annuity, if you have another financial advisor, they're not picking your stuff, okay? They're not picking your positions, okay? The number one value that I think that I have, and I'm ranting again compared to somebody else, is that when a client calls me, I intimately know, and I use intimate because I made these choices for them. I know what's in their portfolio. When someone calls me, I know what's in their portfolio. When you call your advisor, if you have another advisor, or you're working with someone else who quote unquote manages your account, they have to pull up your account to see what you're in because they're not intimately invested in it. Now, yeah, it is fair. Whenever I get 1,000 clients instead of the hundreds that we have, it is going to be a little bit more difficult for me. But also, I'm not picking. There's not hundreds of stocks that we're invested in. There's only a few, right? Like we believe in that Warren Buffett method, the 20 punch card, okay? The 20 punch card investment method. Now, I probably watch between 50 and 100 stocks, but as far as things that we're like putting our money behind or clients' money behind, no, we know exactly what is in that account. So Palantir is something I would love everybody to have. It's going to be extremely volatile. It was at $60 last week, I think last Friday, and now it's at $115 or $112, somewhere around there. Let's see. I got to double check, so I'm not putting my... Okay, it's at 110, so I was close. 110 spot 85. Guys, I believe in this company. They're taking time, they're taking projects and giving time back to companies and governments and militaries, and that is the most valuable thing you can do as a service for a company, is give them back time. And I see them being a Microsoft. So like the baby boomer generation, they had Microsoft. They could have invested in the 90s and the early 2000s. A lot of them probably didn't. Some of them maybe did. This is what I would consider the millennials Microsoft, and I'm happy to put my name behind that. Also, yeah, if you're in Palantir, you killed it, okay? I don't think it's a sell. It's very possible it's going to drop below 90. I don't see it going much lower than that as far as just like volatility in the stock. I think this company is going to be, I think Palantir is going to be used by every S&P 500 company, and I think arguably by they're very pro-America, so they're not going to work with like Chinese governments or Iran or anything, but any U.S. friend they will work with. So this is going to be a $1 trillion company. That is what I believe, and I'm putting my word behind it and my money where my mouth is. My own money's in Palantir, and as a firm, we just love the company. Okay, yeah, guys, real quick before we end, I want to talk about crypto. Okay, and again, disclosure, I can't recommend this to anybody. I'm not allowed to. And I also wouldn't because I don't fully understand it, but I am very excited about it. And just like how AI is the future and everything's moving towards AI, the blockchain, right? This, whatever that buzzword is, we don't even really know what the blockchain is, but it is where crypto exists. And I do think the future is going that way. And let me explain why. So there is a company, not a company. Maybe it is a company. I think it's probably a company, but it's a token or it's a crypto called Ondo, ONDO. So if you want to look this up, you could type it in and a ticker would come up and you'd find it. And if you wanted to go on Twitter, you could type in the $ONDO and everything about Ondo would come up. And shout out to Big Bucket John, aka Farmer John, aka Moonshot John, is a good buddy of mine who got me on the crypto train, especially the last probably 6 months. Just a lot of reading. Okay, I did a lot of reading before I invested in anything. He loves XRP. I have some XRP, but he is absolutely gung-ho about it. And I'm not an expert enough to talk about it. And maybe I'll bring him on to have, a more enlightening conversation. But what am I doing? I'm ranting again. Okay, we're going back to Ondo. Sorry. One of the things that he showed me, so shout out to John here, is about Ondo. Now, Ondo is very unique, right? When you hear people talk about crypto, they talk about, oh, the project is really impressive and it's going to be massive and the utility is just going to be out of this world. Those are all buzzwords, okay? It's all buzzwords. Now, when it comes to Ondo, I do think that this possibly could be really massive. And the reason I say that is because they're focused on Wall Street. So moving stocks over to the blockchain. So one thing they're already doing is creating tokens that represent treasuries. So U.S. treasuries. A U.S. treasury is a guaranteed bond. It's a bond, but it's a loan. You give your loan to the U.S. Department of Treasury, and they will give you back. Right now, like the 3-month treasury is at like 4.4% or something like that. So annualized. So you will get 4.4% on an annual basis if you buy those treasuries. Guaranteed. It's the only thing that I'm allowed to say is a guarantee, is a U.S. Treasury. Is a U.S. Treasury, because they've never defaulted. Even during times of war, even during the Great Depression, they never not paid. So that is the safest investment ultimately that, and you don't get paid, you don't have to pay state income tax. It's just federally taxed. So CDs, they give 3, 4, 5%, but you're taxed. You have federal and state income tax. So if you're at 5% and you got to pay both state and federal, Treasury at just federal is better, at 4% than at 5%, having to pay both taxes. Anyways, Ondo is essentially they're trying to tokenize, which think of a token as it's a coin. Okay, so they're trying to create a coin for Wall Street companies. So instead of having a share, right, a share of NVIDIA, you might have one token of NVIDIA. Right? You might have one coin of NVIDIA. So they're trying to move that over, and it'll be an entirely digital process. I definitely see that being the future. And Ondo is kind of the first one who's really talking about it, and they're doing it, right? The Treasury is doing. They're tokenizing Treasury bills, which is crazy. It's only, I would say, common sense to say that the direction goes from the most guaranteed investments, and then you slowly move to riskier investments, aka stocks. And I just see that being the future. So Ondo is at the forefront, and they're doing that. They're trying to tokenize the stock market. I don't even really know what that means, what that looks like, but Wall Street 2.0 is how they described it, and I think that's probably what it's going to be. I think it's impressive. It's terrifying at the same time, because you're essentially taking, like, I view it like, I don't know. I didn't really pay attention that much in history, but there was like the Industrial Revolution, right, where things went from being made out of wood and coal was being used, to now things are being made out of steel, and then actual gas is being used. It's just like that progression, right? And now we have the digital era where everything is going on the internet. And then now we're going to have everything going on the blockchain, which is still the internet, but it's a significantly more efficient internet. And then the AI is going to run it. So AI and the blockchain, and then quantum computing too. That is sort of that's the next quote unquote revolution. And I see this. I see it happening, and I want to be a part of it, and I hope you guys too. So this is not advice. Don't go buy, $55,000 worth of Ondo, but I'll tell you, I'm in Ondo. Okay, I've got money in Ondo. I've got money in XRP, and I think that what they're doing is good, right? When things get tokenized and it goes on the crypto, the platform, the blockchain, I think you're forced There has to be just more transparency. And I need to understand more of that before I can confirm that that's, 100% true. But I can tell you right now, all of these BlackRocks, Vanguards, Charles Schwab, and I custody at Schwab, and I love Vanguard, and we use BlackRock funds sometimes. They're out there to get theirs, okay? And they're not skimping, and there are fees you don't know about, and there are fees you do know about that are higher than you think they are. It's just, you're a small fish in a great big world, and I feel like this moving to the blockchain has potential to just make you a little bit more of a fair player, right? That's how I would look at it. You're probably never going to be at the big boy table, trading billions of dollars, but maybe you might be able to just get treated a little bit more like you were at that table. So, guys, I'm 5 minutes over my time. I'm so sorry. I hope you guys learned something, and I hope you got excited. I hope you guys get excited. I am so excited. Guys, I love this. I love where we're going. And yeah, this is what we do at 77 Financial Group, baby. We get up at 4:30. We read 10 Qs, 10Ks, 8Ks. We evaluate companies. Oh, one thing that we're going to be doing is we're going to be coming out with a grading scale, which I'm super excited about. And it's going to be very unique because right now it's going to be, whenever you get a grade, like a stock is a buy or a sale, it's all past information. So like when you hear, I know I'm ranting. Sorry guys, just give me a second. When you hear a company's earnings per share, or you hear, what did they do revenue for last quarter or this last year? Those are all past statistics. And so you're getting outdated information, and you're often not really able, like an analyst might give something a grade. All of that stuff is hard, factual data, the revenue, earnings per share, etc., but it doesn't take into account the future. And so what I mean by that is companies like Tesla, Amazon, Nvidia, they were all quote unquote overbought, overvalued, meaning that they were way more expensive than they should have been for 5-10 years. And what I'm trying to get at is that the people who got in way early, they had to deal with 5 years of analysts telling them NVIDIA is expensive, NVIDIA is not worth what the share price is, et cetera, et cetera. And guess what kept happening? The price kept going up. Tesla kept increasing. Amazon kept increasing. And the reason for that is because analysts, or a grade, is a stamp in the moment on past information. And so what I am trying to create is a grade, a 77 grade, where I'm taking into account the future, right? And it's not just the future value. You can do future earnings. There's a whole bunch of quote unquote future equations you can do to get a number, right? You can do future earning projections and whatnot, but it's still, one, they're almost always wrong. Every projection from an analyst is almost always wrong. Okay. It's very, very difficult to be perfect and spot on. And so what I want to do is I want to be able to give a grade, a stamp from me that, hey, we believe in this company. So a good example would be SoundHound and Palantir. If I would have told you SoundHound and Palantir were buys last year, you guys, based on analyst information, it would have been like, this is a horrible stock to buy in. SoundHound's a penny stock. Palantir's way overvalued. It's at $21. Well, now they're both, SoundHound is $15 with a high of 25 in the last 3 months, and Palantir's at $110 right now. So what we're really working on is trying to create a grade that we believe in, that we can, put our name behind and our stamp behind. All right, guys, this is way too long. I'm so sorry. As always, invest early, invest often. We'll see you next week.